We are back here for another episode of Fire Breathing Rob. If you're listening to us on the podcast or YouTube, please subscribe, like, and share. We have a great guest on, and we keep bringing them back because not only do I like them, but I know a lot of people like them that listen to them. This is Darius Ross. Darius Ross back on the program to talk about the real estate market. We're talking about the debt ceiling. Obviously, that's been huge in the news right now. I do want to even dabble into the $3.5 trillion plan. That is, who knows what the hell is going to happen with it. And the infrastructure plan, too. Who knows what the hell is going to happen with that, too. But regardless, Darius, thanks so much for coming back. You know, you're always welcome back, and I'm happy that
My pleasure. My pleasure. Definitely looking forward to a good discussion tonight.
All right, so let's kick around the debt ceiling. So, you know, what is the difference? I guess we should even just start this out because a lot of people don't know the difference between the government shutdown and the debt ceiling. Can you kind of explain that to the viewers right now? Because, you know, people that don't watch politics or know much about this stuff, they could think they're both contained together. They might not even know the difference between both.
Let's look at it from the numbers. We'll deal with the sheer numbers of what a shutdown would mean, and I'll define how the shutdown is kind of there. Okay, in averting a shutdown, we're looking at 6 million jobs, $6.6 trillion that operates the government every single year. So we figure 12 months, that's $500 million per month, $500 billion per month, I should say, $40 billion per day. Okay, that's the first statistic. So we don't think about that again. 6 million jobs will be impacted immediately. That's not including auxiliary jobs. $6.6 trillion for 12 months, $40 billion a day, $500 billion a month. That's the first order of business. Now, when we look at that and looking at the budget, we're looking at living within the means, the economic income of the taxpayers. Now, first order of business, there's 70 million retirees. Those people aren't going to be paying taxes anymore. So they're coming off the tax rolls. So as a result, we now have millennials and we have people that are still in the tax rolls. So now when we try to explain the debt ceiling, how do you turn around and maintain a debt ceiling where you have all these other programs, including social programs and auxiliary programs and off-balance sheet programs that have to be financed with 70 million people leaving the tax rolls? That's the first order of business. So we're defining the two things. You have the tax rolls that are now going to be gone, not including the people that left during COVID, not including the people that died, okay? And then the people that are unemployed during COVID. So now we define these two things. You have the debt ceiling, which is strictly how do you manage the government? How do you maintain a budget? Then you have overting the budget, which is trying to figure out, okay, how do you keep this balanced? Meaning that how do you balance a $6.6 trillion budget, which currently right now, the US debt is $26 trillion and climbing, okay? That's where we start right there.
What is your opinion on modern monetary theory, which all this is kind of a scam about all this money, and we can print our own money, which we do, and spend it on, you know, as much as we want. A lot of people will push back and say there'll be huge inflation. So, you know, what do you feel on modern monetary theory?
Okay, let's play a simple system here. You're saying, effectively speaking, when you look at MMT and Milton Friedman's concept, okay, the United States has the ability to print money at random because of the fact it is the safest currency in the world.
Right.
It's always and it's never defaulted on its debt, okay? Very simple. So that means that we don't have to worry about, per se, the ability of it being backed by gold anymore. Okay, so you can print $100, $1,000, you can print whatever you want. You have the ability to actually raise treasury bills, treasury bonds, or whatever else. The United States has never defaulted on its debt. Again, because it's backed by the full faith of the US government. But here's the problem with that. $26.9 trillion is outstanding, not including the $200 trillion in social programs, letters of credits, and derivatives. The world debt is $281 trillion right now. So first order of business, there's a day of reckoning coming with all that, just looking at that for what it is. There's no cap to cover all the potential liabilities. That's including all the derivatives, the letters of credit, and all the off-balance sheet programs. So the United States has off-balance sheet programs that never appear on the budget, which are social programs, the military blackout programs, and on and on. So we have the credit derivative programs, spending appropriations, which never appear. In order for the US government to maintain a balanced budget, we're talking about you'd have to create a debt ceiling of over $10 quadrillion. The numbers are mind-boggling. So now when they're saying MMT, they're saying basically the ability to just print it at random, and there's nothing backing it up.
Yeah. So you're not for that then?
It's impossible to maintain it.
Mhm.
If you balance the budget, yes, but you can't balance a budget that you have all these programs that you can't back up with anything, especially when you don't have people to pay the taxes.
Well, can we go right? Well, then let's go back to the tax problem. We see these billionaires all around the country. As for even before that, we're seeing billionaires not paying taxes. We're seeing the corporations don't pay any taxes, and if you do get taxed a certain rate, they just move that company overseas as far as the tax rate goes. Whether it's to Ireland, I know they're very popular to be moved over to as far as that goes. So is that the real problem where we could do something like MMT and really balance the budget? But like you said, the only way we're going to balance the budget, and you can correct me if I'm wrong if you're not saying it this way, is if these people that make these billions and millions of dollars actually pay their fair share in taxes. I know you're an FDR guy. We go back to FDR when these people are paying 50, 60, 70% in taxes. And no one really, hooted and hollered. I'm sure there were the few people that hooted and hollered, but it wasn't like it is now. So I feel like right now, going back to 70% as far as these people, millionaires and billionaires paying that, it's not even going to happen because we're so far away from that right now. But how do we get that up to maybe 30, 40%? Can we even do that now? Or are we just so far away from that it will never happen again?
Okay, first order of business, there are tax shelters that will basically never be abolished. That's the first step. There's a friend of mine, Chuck Collins, wrote a book about the wealth hoarders. And, the audience really needs to check that out. It's called Wealth Hoarders. It talks about how these offshore companies and offshore situations set up. They have the Panama Papers, now the Pandora Papers. So let's steer clear of that for a minute for the following reasons. You're never going to fix that. Now, I was one of those individuals that we had an organization called Responsible Wealth and United for Fair Economy about making sure this got balanced, okay? But that's never truly going to happen because the ability for wealthy people to be positioning themselves to be able to deal with the tax liabilities and so forth. So that's not going to happen. But here's the problem. If you open up the borders, right? And you open up the borders to allow for more economic stimulus. This is one of the big problems. You're sitting there saying basically that you're not going to allow the United States to have open borders. Okay, so let's say you can't tax the wealthy, okay? And you can't tax them appropriately. Well, why not allow for more citizenry to come into the United States to make more taxation to allow for more money to be made? And then you have more taxes. So versus the country being closed off from millions of people that would come here and create jobs, because immigrants create jobs. That's a fact. They do things that nobody else wants to do. So why not open the borders up and allow for that?
Is that the problem right now, that with the Democratic response is that they just can't pass any bills and they can't get anything done? And that's why they're going to get, President Obama's words, shellacked in the midterms.
They're going to get creamed in the midterms. There's no doubt about it. But if this was a smart move to make, if I were Mr. Biden, I would turn around and send Kamala out. I would neutralize probably most of the moderates, neutralize them by giving them a bone. Here you go. Here's what you want. I'll give you what you want. Even if you give them a quarter of what they want, give it to them. Joe Manchin, give him what he wants. Kristen Sinema, give her what she wants. Let them go out there and put on stage and say, this is what I got, this is what I achieved, and that's that. Win the battle versus the game for the moment. I can tell you this much, though. If the Democrats don't figure this out soon and the Republicans just lay back in the cut, so to speak, I can see an independent candidate coming to the table that might knock both of them off the ball game. That's a possibility. Now,
who would this independent be? Would you think it would have to be somebody with a lot of money, obviously, because when you're talking
about, probably be a very wealthy candidate, but one that's not necessarily being seen right now. or
Could
someone
you see
backing that candidate.
somebody, and this is kind of somebody in your realm, could you see somebody like a Tom Steyer, ran for the Democratic nomination, has a lot of money, somewhat progressive? I don't really know if he's the most energizing person, but he's got a lot of money and he is somewhat progressive. And I think he still has that name recognition and can finance a campaign against somebody like Trump and Harris. What do you think of somebody like that?
Think somebody younger. I would say someone in the early 40s.
You talking about somebody like Elon Musk or
that type? Yes.
okay.
That people can relate to, wealthy, dapper, ladies like him, handsome, you know, has that savoir-faire, came from the working background, struggled to make it to the top, the working man can relate to. Another Donald Trump type, wealthy and so forth, but not with the mouth.
What about Jeff Bezos?
Possibility.
That's
he
scary.
could play it. He could play it.
He
He could play it. Everybody has Amazon in their house. He could play that. That would be a very strange situation, but he could play it all the way to the presidency.
Does that scare you though also?
It's a
Why?
possibility, so it's not scary, because as organized as he's done Amazon, I can see what he do with the country. So it's not so much scary, it's practical now.
I agree with you because it does make sense that he dropped out of, well, he didn't really drop fully out of Amazon, but he left being the CEO out of Amazon. So I could see that kind of finagling toward that way. But then you could also say, hey, Jeff Bezos could be somebody like Howard Schultz of Starbucks. You know, Howard Schultz said he was going to run, he was going to run, he was going to run. He had to run because somebody had to beat Bernie Sanders, and then he never ran.
See, I can see a situation like him backing a candidate that doesn't have the resources, a no name that they can create a name for over the next 2 or 3 years. So I can see him and an Elon Musk and a couple others actually aligning themselves in a collaboration, saying to this candidate, listen, if you can play your position and you can get us what we need, we'll put you in there. That I can see happen. It's going to be somebody that came from nowhere.
But that would
another
mean,
situation like a Barack Obama kind of thing.
so if we're talking about somebody like this that's financed by people like Elon Musk, Jeff Bezos, Howard Schultz, all these other billionaires, we're looking at somebody, like you said, it could be someone like the type of Barack Obama type of speaker like that. My worry is that if we get that person, it's just another corporatist.
Well, you might be surprised. I mean, that might be a situation where he could have a socialist agenda / corporate style / smooth enough to play the game to whereas the people can like him, corporations will like him, the people will get something out of it, not all of what they want, but the corporations will win.
So do we go like the FDR type? Is that what you're talking about?
Absolutely. I can see that.
So the people got a lot of what they wanted, but go ahead.
I can see, like I said, when you want to talk about when I'm strongly on Kamala, I can see where this individual can come out of nowhere land and sideswipe her all day long, based upon nobody seeing the ability for him or her to be strategically shrewd. Because they're going to be smart, they're going to be intelligent, probably Ivy League, very articulate, very oratory skills, very smooth.
Now, Kamala is a corporatist too, in the ranks of Hillary Clinton. But my question is, are you trying to say that this could be Kamala or this person would shellac Kamala?
This would be the individual that would just knock her off her heels because it would be an unknown candidate, but it would be somebody that would be very formidable to her in such a way that it would be a very close election, but they would have the savoir-faire to bring the people to the table where the people would actually say, you know what, we might see that the corporations are going to win, but we can even win too. Because like I said, the bottom line now is jobs, healthcare, and this country having somewhat of a, kind of get tough policy on crime. So if you can sell a good tough policy on crime, you can clean the statistics up. You can kind of slow down on the whole spending expenditures as far as this debt ceiling, and people are not getting taxed out of the proportions, they'd win.
What is your take on the job crisis in this country? Do you feel like it's just going to keep getting worse before it does get better, or will it even get better anytime soon, for that matter?
Well, so let's throw a curveball in there. As I was mentioning you earlier about the whole Chinese contagion. With those two companies, Everguard and Fantasia, and the Chinese economy being where it is, with those ships sitting offshore, with the real estate market there getting worse because they're not able to meet their debt and bonds and debt service, what you're going to be looking at soon is a financial crisis, as I've been saying, of epic proportions. So the job market is only going to get worse. I mean, if I were actually to make a prediction, 2022 will probably be the worstest job market in U.S. history. I would say probably another 10 million jobs lost. And ultimately speaking, the question of the hour becomes, does the U.S. come to a point where it's going to actually face the day of reckoning on a financial crisis, to the point that we're going to have another Lehman Brothers situation, where when you have those companies in China going out and going under, and ultimately speaking, they can't make the debt payments because the Chinese companies beginning next year have $22 billion in debt payments that they have to make. Now, who are those payments to? Very large institutions here in the States. So what begins to happen? If they go under, U.S. companies go under, and it goes on and on. It's a domino effect. So this contagion is going to get worldwide, guaranteed. So the job market's only going to get worse.
So you're sticking to your prediction then?
Absolutely. I would say at least 10 million jobs, minimum.
Wow. So we're going to see a huge homeless crisis then, obviously, in this country too then.
We're already seeing it now.
Right.
This is not being talked about. No, not even with COVID. It's going on now because so many people are out of work. And so many states now have began to evict.
So what is this thing where we hear on TV? Is this total BS when we see, there's so many people with hiring signs. And I even drive around Florida. I'm here in Rhode Island. I've seen it up here too. We're hiring $15. Well, this is in Rhode Island, not in Florida, but we're hiring, this is in Rhode Island, about 15, 16, 18 bucks an hour for a manager. So, with all these signs we're hiring, what is the issue with people accepting these jobs?
A lot of people have saved up a lot of money since COVID. They've saved up unemployment. They have stopped paying expenses. They weren't paying rent. Why do I want to work? I got money now. Why? That's the bottom line. Why?
But does that play into the issue, like Manchin says? Why should we give money to? I guess he didn't. Or Joe Manchin didn't say why. Why should we give money? He say we have to kind of tighten down the reins on, the child tax credit, as far as that goes, and other issues where there's money being pushed out because there's employees that can't find workers. Does that kind of play into that though?
Well, see, that goes back to the corporate situation. If you have corporations now that in a lot of cases got, for example, there were companies that recently got the COVID package and they got COVID monies. Right. Okay, so they made out well in that.
Act you're talking about.
That's right. So they made out in that. And as a result, they were waiting for the moment when they could turn around and get rid of employees. So they don't want the employees back in a lot of cases. You got to realize it's real estate costs. It's outstanding costs for them being on the premises. It's unemployment costs. It's all these costs. So theoretically speaking, I prefer to have you off site, out of sight, out of mind. If you half-ass do the job, it's a beautiful thing. And if I can downsize, even better.
But this is crushing places like New York, big cities in general, Boston, Los Angeles, because a lot of these companies were in these big sky-rise buildings. They rented out floors. And with that said, if they're not going back and working there, then, obviously that building goes vacant. And, then whatever happens. Probably some Chinese company buys it out, or Russian or something. And that's
You're
what
going to
happens.
have zombie cities very soon, where you have a lot of skyscrapers that are completely empty because of the fact that the owners are going to abandon those properties. They're not going to turn around and keep trying to maintain those properties because there's no purpose in it. The tax basis is still there. Their operating costs are still there. Their mortgages are still there. You're starting to see now a lot of real estate companies that are walking away from the debts. The collateralized mortgage debt obligations, those CMBS that they call them, they're going to start walking away from them because right now it's just too much.
Yeah. So if you're, because I go back to 2008 and I've watched a lot of documentaries on this. I remember down in Miami, there was these, there's big sky rises, just like there are in New York, condos. These condos were, $1, $2, $3 million. And this guy was talking about how he went in there and he was, nabbing a lot of these condos for 50, 60 grand, which they used to be, $1 million. Is that what's going to be happening? Is that what you're talking about where these companies are just going to, these, whoever owns the building in general, I guess I should say, is just going to give it up. And you could go in there and crush it if you have, some money saved up then.
You're going to see real estate at pennies on the dollar. It's not real estate for sale, it's real estate on sale. Over the next 4 or 5 years, that's what it's going to be on sale. You're going to see a lot of malls, multifamily complexes, storage facilities, and on and on, because there's just not the ability for the lendee to maintain. It just won't be there.
But is this just commercial then? It's not going to really hit the, regular housing market, like houses.
Oh yeah. Residential too. Oh yeah.
Residential.
You're gonna
Okay.
see at least 40 or 50% knocked off the top. And there are going to be people that'll be underwater in those mortgages because they bought them at the highest end. So you're going to see a lot of properties sitting on the market that'll just be sitting there. You're starting to see it now. It's just very quietly because the mortgage companies are not trying to take them back right now.
So how does a young person or a person even older prepare for this?
First order of business is that the bottom line of it is you want to get debt free. You do not want to be in any debt if you can afford to. And I would say to young people, if they're looking to do anything, look at getting a specialized trade. Medical, construction, things of that nature where there's a trade, okay? Nursing, technology, things of that nature, things that are needed on an ongoing basis because technology is going nowhere these days. People that are in the engineering business where you're engineering a special skill or machinery specialized skills, absolutely. Because you're going to need those specialized skills because that's not going out of style. Just general liberal arts, waste of time. Get into a specialized skill, That's going to be the key to things now, period.
Yeah.
And then, like I said, maintain debt free and really trying to stay within the budgetary situations. You can't live off of 80,000 thinking you're going to live like you're making 80,000. If you're making 80,000, you're actually only making about 50.
When this happens, is it going to be the time if you have a little money saved up to maybe, buy 1 or 2 houses, fix them up and then keep them maybe for a little bit and then, sell them? Or is that not going to work out in this kind of atmosphere?
You want to look at the long-term atmosphere. You want to look at buying a multifamily house, maybe 2 or 3 units, and having tenants in there that can maintain the property for you. And if you're going to be as a young person looking at longevity, look at maintaining that property at least 10 to 15 years. Okay. Because you're building up an equity stake, you're building up the value of it. And real estate basically appreciates 2% to 5% per clip. This 20, 30, 50, 100% per clip, that's unrealistic. That's never happened. So that's why it's so flawed to your market right now. 2 or 3% a year, that makes more sense. Maybe you increase value by $5,000 or $6,000. Yes. Increasing value by $100,000 in 1 year? No, that's unrealistic. And that's the problem.
This just after the New Deal that this slowly started to snowball into almost like an abominable snowman now. Is that what we're talking about? Or are we talking like just 2000 on that this kind of really
We're talking about probably the late 80s when there was something that was called the leverage buyout craze. When you had a situation where debt was used as OPM, other people's money, and debt was used to create all types of opportunities. So Wall Street created its own level of money, okay? And when Wall Street created its own money, that was wonderful at the time. Titans of industry were making hand over fist. But all of a sudden, everybody got into the game. And people that got into the game that shouldn't have been in the game now have created a situation where you have real estate that's out of proportion. You have people that actually invested in companies, meaning CEOs that walked into a company and were given phantom stock. Okay, I'll give you 500,000 shares. for you to direct the company. But most of the time, the company was either directed in the wrong direction, or the company just bought up other companies trying to create some kind of synergy. And maybe it did or it didn't. The CEO walked off with $200, $300, $400 million. And as a result, we have this craze. So we have a greed craze. And greed is only going to maintain for so long because there's only so many things to go around until it stops.
So this is like the Wolf on Wall Street movie.
Absolutely. Absolutely.
Okay.
It has to come to an end. It's called pump and dump, as we call it on Wall Street. You pump up the prices and then you dump it. The only problem with it is the last guy sitting in the chair, he gets screwed.
Right. So I guess we'll end with don't get involved in the stock market anytime soon then.
No, you want to stay clear of the stock market, at least over the next couple of years. You don't want to get caught, as I say, at the end of the rainbow there. It's not going to be pretty. I would say some folks are going to be looking at what's 35,000 now. If we look at this a couple of years out, we'll be looking at 5,000 to 8,000. A lot of carnage.
Wow, that's great. What are the, you talked about like real estate, and then I'll end with this but I just have this question now. What are the industries that we should look at right now to prove your point, I guess, as what's going on?
Let's look at transportation. Let's look at housing. Let's look at retail. Let's begin to look at what is considered both healthcare, because healthcare is booming, but you look at those other industries or not. If you look at something as simple as transportation, when you look at the shipping industry, the trucking industry, you see what's going on there. They're going under. If you look at the human resource area, when you look at the, they call them the short-term companies that do employment, another major issue, they don't have the employees. If you look at the hotel industry, going under. If you look at the industries in the shopping centers, nightmares. If you begin to look at industries like food services, the number of food chain restaurants that are going under, that kind of gives you an idea. It's there, you can see it, very bold. If you look down the average city and just drive around and look at the empty vacant stores, starts giving people ideas. These are empty stores that once had businesses. What does that say? And then if you really want to get an idea, walk out in the morning time and look at how many people are walking around jogging. That'll really give you an idea. Ladies that are jogging, men that are jogging, aren't they supposed to be at work at 9 o'clock in the morning?
Right. That's true. Good point.
Okay.
Good point.
Okay. Well, now you're seeing everybody jogging.
The only industry I see that, personally, like visually see really booming is fast food.
Mm-hmm.
I mean, they are crushing it. I've never in my life, I'm only 32, but still, regardless, never in my life seen the lines to go into these fast food joints. It's incredible. Why do you feel like that is? Do you know? Off the
Quick,
top?
fast, and easy. But even the fast food's having problems now because they can't get workers. So that's a real big problem. They can't get workers. Now, on the other side of that is the cost of it. See, when this money runs out at the end of the year from the unemployment, you're going to see fast food industries take a hit.
Why?
Because there's no more money. Unemployment's going to take that hit. And then when this moratorium officially ends, you're going to see that start going down because people have excess income now. Well, see, part of the problem is that's what we have a problem now. See, once that money came into circulation, people figured out, well, hell, I'm making more money being at home than I am working at a job. And see, we had this whole thing where we had millionaires that were trying to focus on trying to create the minimum wage. Well, when that happened, companies decided, okay, we'll just cut the employees. We'll create electronic ways of checkout. We'll create electronic ways of sending stuff overseas and so forth. The only way you're going to turn around and crush unemployment and get people back to work is to be realistic with the situation that we have. First, you've got to stop the COVID epidemic. The second part about the companies is the companies have to be realistic and realize why people don't want to work. They're overworked. First and foremost, they're overworked. You got one person doing 10 people's jobs. People are tired of that. You now have a revolution and you don't realize the revolution is taking place. The third thing, which is most important, is the fact that when you let people know that they can work from home, that sounds pretty good. So, okay, sounds good in theory. Now the issue of the hour is, what are you going to do for benefits? If they're going to still be able to get the benefits and everything at home, then why not work from home? It sounds wonderful, but then how do you track the production? So you got to fix all those problems. Okay, then the fourth thing, which is the biggest thing, is going to be the production of the work. How do you make sure that the quality of work is going to equal out? So you got a lot of things to fix to get them back to work. And then first and foremost is a salary. I want to make the same amount of money that I was making when I was at the job coming in minus the commute. So if I can stay at home and make the same amount of money, why don't I want to stay at home?
But anyways, can you end the interview with some hope, Darius, if there's any in your mind in general?
Absolutely. If you're an investor right now and you're looking at the potential of the future, if you're smart enough now to take advantage of the housing market in the next couple of years, if you're smart enough now to take advantage of the investment market in the stocks, bonds, and securities, you're going to see the ability to take huge opportunities in those markets. If you have $50,000 or $100,000 and you can turn around and take advantage of buying property or buying in the stocks, bonds, and security market, you'll make a killing, over the next 10 to 15 years, once this thing readjusts itself, because the system has to get cleaned out. For once, we got to clean the system out. We didn't do it in 2007. And so now there's time for the system to get awash with all the garbage that's in the system, all the debt and so forth. Will there be opportunities? There'll be tons of it. So that's the real bright kind of sign of this whole thing. We just have to get past the toxic.
So you saying that you think personally that there's going to be houses back on the market, 4 bedrooms, 2 bathrooms, maybe even bigger than that you can get for like $120,000?
Even less. You're going to see it,
Wow.
particularly speaking, markets that are coastal markets, a lot of coastal properties that'll be on sale. You will see a lot of luxury complexes on sale.
Yeah, but the coastal markets you go back to, and I know you brought this up in a previous answer, you go back to the hurricanes, you go back to the sea level rise. So you are kind of playing Jeopardy with that as far as, do you want to buy and pay that high insurance, or do you want to take that chance? So I don't know personally if I fully want to
Hey,
take
if you want the
chance.
lifestyle, you got to take the chance. That's what it
Yeah.
comes down to. You're getting the lifestyle of being on the ocean. The downside of it is the ocean comes into your house. It's part of the problem. It can go left on you.
Anyways, all right. We'll end with that. Darius Ross again. We're so grateful to have him on. And we'll definitely have him on in December again for another hour or so. So we really appreciate his time. He really does give us a lot of great information. So Darius, thanks so much again for always coming on and giving us time.
My pleasure. My pleasure.